the standard deduction or itemized deductions. On Form 1040, there is a line for either the standard or itemized deduction, and this deduction is going to reduce the amount of income that is subject to tax. Now, it's either standard or itemized, and so the taxpayer is going to select to itemize their deductions if the amount of the itemized deductions is bigger than the standard deduction. The standard deduction is just a fixed amount based on what the taxpayer's filing status is, and the itemized deductions are going to differ from taxpayer to taxpayer. And so each taxpayer is going to go through and determine what their itemized deductions are, and if the itemized deductions are more than the standard deduction, they will choose to itemize. If the standard deduction is larger, they will choose to take the standard deduction. Now, not everybody is eligible for the standard deduction. Some taxpayers are not eligible. If you're married, filing a separate return when the other spouse itemizes deductions, you don't get to take the standard deduction. If the tax return is for a short year because of a change in annual accounting period, you're not eligible for the standard deduction. Or if the taxpayer was a non-resident or a dual status alien during the year, they're not going to be eligible for the standard deduction. So first, before we get into looking at the itemized items, what is the amount of the standard deduction? Well, for 2020, $12,400 if you're single or married filing separately, $18,650 as head of household, and $24,800 as married filing jointly or qualifying widower. Again, you don't need to remember these items down to the exact dollar, but just be aware of approximately what these amounts are. Notice that single or married filing separately is half of married filing jointly or qualifying widower. And so that's the standard deduction that a taxpayer has just kind of as a starting point. If they can do better than that with the itemized, they will. But if not, you get the standard deduction. Now, there's also an additional standard deduction if the taxpayer and or their spouse are blind and or 65 years or older. And this additional standard deduction is $1,300 in 2020 if married filing jointly, married filing separately, or qualifying widower, or $1,650 if you are single or head of household. Now let's go ahead and look at an example about this. For 2020, a blind taxpayer and spouse who is not blind, both age 66, may add $3,900, that's 3 of the $1,300 exemptions, to the married filing joint basic standard deduction of $24,800 for a total standard deduction, or I guess standard plus, of $28,700. Now, a taxpayer who qualifies as both blind and elderly is entitled to 2 additional standard deductions for what would be a total of $2,600 or $3,300 if they're single or head of household. Okay, so you get that additional. If both you and your spouse are blind and over the age of 65, you would get 4 of these additional deductions depending on what it is your status is. Now, we also have the standard deductions for dependents. The standard deduction for a dependent cannot exceed the regular standard deduction that's based on their filing status. The basic standard deduction for an individual who is the dependent on another person's tax return is generally limited to the greater of $1,100 or the individual's earned income for the year plus $350. Again, don't worry about those specific amounts. We just have a limitation on the standard deduction for dependents. Now, that's the standard deduction. We said the taxpayer gets to choose whether they want the standard deduction or the itemized deduction. The itemized deductions, this is done on Schedule A. There's a few categories of itemized deductions. There are medical and dental expenses, certain taxes that are paid, interest expense, charitable contributions, casualty and theft losses, and some other itemized deductions. And so a taxpayer is going to go through and determine what medical and dental expenses they have that might be able to be deducted, what taxes paid might be able to be deducted, and adding up all of these itemized deductions. If this is greater than the standard deduction, they will choose to itemize. If the standard deduction is greater, then they will take that instead of itemizing their deductions. And so here, this is just the list of what the itemized deductions are, and we'll look at each of these in more detail in order to determine what is able to be deducted under each of these different categories of itemized deductions.